Future Commerce is brought to you by Vertex. Vertex Cloud is for businesses of all sizes, from small and medium-sized businesses all the way to enterprise. You can find out how Vertex can help your business by visiting them online at vertexcloud.com/futurecommerce. Future Commerce is brought to you by Omnisend. Omnisend is way more than just email marketing. Drive more sales and combine more channels with one platform. Learn more about Omnisend today at omnisend.com/futurecommerce. Future Commerce is brought to you by Gladly. What if customer service could feel like a conversation between friends? Well, Gladly is a radically personal customer service platform that puts people, yes, people, at the center of a single lifelong conversation. By enabling B2C companies to focus on people talking to people, Gladly powers a lifetime of conversations across every channel, from phone, email, text, chat, and social media. See what a truly customer-centered platform looks like today at gladly.com/futurecommerce. Today we have an awesome episode for you. It's the first of its kind, actually. We're bringing you an interview that we did with Sari Azout from Level VC and from the Check Your Pulse newsletter, which, by the way, if you're not on, you should subscribe to it. So we sat down with Sari back in February at Future Stores Miami, and we had this amazing conversation that was really broad and sort of all over the place, wide-ranging, covered a lot of ground, and it just never felt right to publish it. We sat on it for many, many months. The world changed dramatically after that event. It was actually the very last live event that I was ever at. And so we just felt like it wasn't right to publish it. But I spoke with Sari this week, and the idea of publishing that interview came around, and we thought, you know what we're going to do? Let's do sort of a before and after, and you know, sort of recontextualize some of the things that we talked about and how Sari feels about things that she's thinking about now. And so there's two parts to today's episode. The first part is my conversation with her back at Future Stores in February. And the second part is a conversation I recorded with her this week, Monday. We sat down and talked about her newest newsletter, some of the things that she's been thinking about, the passion economy, creator economy, what it's like to parent during COVID. We cover a lot of ground in that second half as well. So stick through both parts, sit back, and don't be like me. Turn your notifications off and tune in to my conversation with Sari Azout of Level VC. Hello and welcome to Future Commerce, the podcast about cutting edge and next generation commerce. I'm Philip and I'm live at Future Stores here in Miami with Sari Azout from Level VC and from Rocker. Thank you so much for joining us and welcome to the show.
Thank you. I'm so honored to be here.
I couldn't tell you, I've been gushing for the past 3 or 4 weeks about how much I love your newsletter, which I have been subscribed to for a little while. For a number of months, but that's how I know you. But I'm sure maybe you can help the rest of our audience become acquainted to who you are and what you do.
Yeah, of course. So I do a lot of things. I'm an early stage investor. I am a lead strategist at a startup studio, a newsletter writer, as you know me. I think what kind of unifies my work is less the title and really my kind of overarching interest in building things for people, and not just the technology, but the people behind the technology, who's building it, what problems we're solving for people, and really looking at technology and innovation through the lens of people.
And so, especially on the investor side, it sounds like you enable entrepreneurs, founders to bring their visions to life. What are the kinds of things that you're interested in on that side of your work today?
Yeah, for sure. So Level Ventures is a family office-backed fund. I run the consumer side. And the thesis there really is we look for old, stodgy industries and where there's kind of a low NPS score, high friction, kind of incumbent with a legacy infrastructure that really prevents them from innovating. And we look for founders that are obsessed with customer happiness. So for us, kind of an old, stodgy industry with a founder that has kind of like customer happiness in their DNA, and then some form of kind of technology or insight to enable growth. That's what gets us really excited. So if you look at our portfolio, we've invested in companies in the insurance side, education, CPG, retail. So the unifying thread there is really customer happiness in an old, stodgy industry.
Okay. Yeah. What are some of those sort of success stories, or what are some notable brands that you've invested in?
Yeah. So I guess I'll name a few. So probably one of the best examples, or the breakout company in our portfolio, is a company called Hippo on the insurance side. So if you think about insurance, the average insurance agent is 60 plus years old. They're asking you to fill out a form that's like dozens of pages.
Yeah.
Hippo came in and say, here's 10 questions, and with that, we'll give you a quote. So the experience is a lot more human. It's an insurance company that you don't kind of dread interacting with. Mm-hmm. And really fundamentally, they just understand like people. And so it's just a delightful experience. Behind that, there's a lot of technology to enable that. But in the front end, it's just a company that clearly understands people and how to like make people happy, if that makes sense.
I think that aligns really well with what your sort of stated mission is to bring the human centricity back to the side of in not just investment, but I think in pretty much everything you do. Being human-centered, what does that mean to you? Because I've heard that a lot recently. Everyone thinks they're authentic.
Yeah.
What do you think that human centricity means today in the consumer space?
Yeah, it's such a good question. I think I get to spend a lot of time on the studio side with a lot of people that have ideas for things they want to build, and on the VC side with a lot of people that are like have built ideas and have decks. And what I think I've realized over the years is that most people are obsessed with their product and their technology and not their problem or their customer, right? So to me, being human-centered means you're far more obsessed with the problem that you're solving than you are with the product that you've built. And what that does actually do is it gives you the flexibility to evolve with your customer.
Wow.
Right? So, I spend a lot of time, when I see a deck that says, we are building AI for legal work. I don't care that you're using AI as a human. If AI allows you to solve a problem for me, that's fantastic. But tell me what problem you're solving for me. So to me, being human-centered ultimately means you don't really sell your product, you sell your purpose. Because humans are not driven by products. We're driven by purpose as people. What moves us is how are you going to transform my life? And so I think what's so interesting about e-commerce and retail, this world that you know very well, is that I think the number one skill that you need today to build a company is storytelling. It's the ability to sell purpose, to make story not just be part of your marketing, but strategically be the one thing that you're focused on. And if you think about incumbents, you can't put a COO and a CFO in a room and architect a company like Mad Happy.
Right.
It's obsessed with optimism and authenticity, and it's just this thing that is very kind of in the founder DNA that just
Sure.
cannot be born in the boardroom of Unilever or P&G or any of these
right.
big companies, if that makes sense.
In thinking about that, at the same time, I think there's never been a better time to try to build a consumer brand, and that maybe there's more openness on the consumer side to try things that are outside of the world of that just exists in whatever is on the shelf at their local shop. So I'm curious, in that world of consumer investment, as they're building sustainable businesses or building businesses that are focused around certain ideas or products or needs, how can they organize? Do you think it really just comes down to that founder vision of having to solve something that is a real problem that they care about, or can astute, technically capable founders try to go in search of a problem to go solve? I'm curious about that.
Yeah, I mean, I don't know. The way that I see the D2C space right now is, I think there's such a big opportunity to build exciting brands. And if you think about retail 20 years from now, no, I don't want to shop where my grandparents shopped, and this new generation is going to shop so differently. That said, do we really need another cookware brand?
Right.
You know what I mean? So I just think that
We certainly didn't need any more mattress brands.
We certainly didn't need more mattress brands, and clearly, it's timely time to discuss that because the outcome for Casper, I would say, was disappointing for many. So I don't think that just hiring Red Antler or any of those top-notch agencies, putting up a Shopify site and then spending a lot of money on Instagram, I don't think that recipe is going to yield longevity. Can you find a hole where you can arbitrage into short-term, generating a few $1 million? Yes. But I think to build a category-defining brand, it's never been easier to launch a brand, but I think to build a category-defining brand, you really need to go back to what is that unique insight about your brand story. And what's interesting is it could be a product-enabled enhancement. Maybe you're selling a mattress that has IoT and you can measure your sleep, and so maybe that's there's defensible tech there. But for the most part, these companies don't really have defensibility built into the product.
Right.
So
it's the brand.
It's the brand. Right. So if it's the brand, then you better have a story that's going to resonate. And consumers are fickle. So
sure.
How do you build longevity? And I think that comes down to authenticity and a unique insight, not just everyone's building D2C brands. How do I find a Casper for X or Warby for X? I just don't think that formula is going to yield a lot of success.
So one thing that I picked up from Check Your Pulse in the newsletter is this idea that brands have they fit into that Maslow hierarchy of needs, and that there are sleep brands who may thrive because they are part of the basic function of a need in life. But there's others that stand out in the way that you sort of outline this hierarchy is like Headspace, which are speaking more to the self-actualization and trying to solve the internal need of peace of mind. I'm curious how you think that plays out in this D2C era, and if there are brands that are mindful of trying to appeal to universal basic need versus a more top end of the market or a self-actualized consumer.
Yeah, and I think to me the way I came to this is I started seeing all these brands that just were boasting about belonging and meaning, and meditation apps are a very explicit example of that. But then you have companies like The Grand. It was founded by a few folks that were previously in VC, and if you go to their website, their stated mission is to help people find their purpose. And so I was wow, businesses that are being VC funded that help you find your purpose. And so as I was sitting with this thought, I was Maslow's hierarchy is actually a great way to kind of frame this, because if you think about humans, sleep and food and shelter, the reality is that although social media may lead a lot of people to think that we're worse off than before, objectively speaking, we're so much better off. We don't hunger has been for the most part solved. We have a place to sleep. We've just made so much progress on our basic needs. But I think as a generation, we're still kind of collectively unfulfilled. So I think that the next kind of wave for businesses is to figure out hey, we already have given people food, they already have a place to sleep, the psychological needs around status, they've already been somehow met by Instagram and Tinder and Bumble. But what about our need for belonging, for meaning, for self-actualization? And I think that's to me what explains the rise of all of these platforms. And so on the one hand, you have these meditation apps, which explicitly try to do that. But then you have the patterns of the world, pattern with equal parts and open spaces. I think going back to our previous conversation, they are using those values as a way to build a consumer brand. So, they're all about belonging and domestic coziness and all of these values that I think historically a CPG brand just wouldn't really build their business on. And I think the few brands that are able to do that authentically will resonate. And it goes back to our question about story. The story can't be the marketing. The story has to be the strategy. The strategy to lead change. People can change. Brands can change people. And you have to lead with a story to enable that, I think.
Fully believe that too. It's interesting. I think about the story arc of, and it's terribly dated probably at this point, but a story arc of the way that Don Draper would pitch to a company, and the idea is like it comes from an emotional place that was tied to some part of his childhood, or tied, like it came out of him as like that's the thing you saw in an episode of Mad Men, and I believe we're like, rather than that being pitched from the ad agency, from like a yesteryear example, we're actually seeing founders who are bringing and drawing on their own need for, and that's what I guess is connecting in that authentic way.
100%.
What would you say about this notion that the future of consumer brands needs to be slower, bootstrapped, less about scale and the way that we build technology, or venture has invested in technology, and more around this idea of, I think you called it the degrowth movement. Is that the right term?
Yeah.
Tell me a little bit about that, and does that pose a threat to the way that we're building consumer brands today?
Yeah, I mean, it's such an important time to be talking about this. I think that a lot of traditional investors jumped into the retail bandwagon trying to kind of apply the same thinking that they apply to software companies, to retail companies. But if you think like software is like zero marginal cost, like, Zoom for video conferencing, like if I use Zoom and 1,000 people use Zoom, it doesn't really cost Zoom more money for millions of people to be using it. Whereas I think with retail and e-commerce, there's a marginal cost. There's like physical goods involved, and I think that like we have not, as an ecosystem, really respected the laws of like retail physics, and we see it with like the public markets don't value D2C brands in the same way that the private markets do.
Right.
Like it's just a different animal. So I don't think that means that there's not an opportunity to build these brands. I just think we have to be a lot more kind of rigorous about how we value them. They're not tech companies; they're tech-enabled companies. But I think the multiples, like if you overfund a company, and Purple and Casper is a perfect example of that. Purple raised $2 million, Casper raised over $300 million. And so clearly, like, you don't see that there was like a lot of operational discipline with the extra capital. So, I also think that the internet allows brands to be so much more niche. So whereas before, you could build like Lululemon, a massive company, and reach like a lot of people, now there's like, Lululemon for like this type of person and that type of person. And so I think that as the internet enables that, I personally think we're going to see more like $50, $100 million brands and less like billion-plus outcomes.
Right.
If that makes sense.
Does that box out venture in some way? Because the typical, method of venture would be to look for those really big outcomes. How does venture, or does venture change? Like, tell me what that looks like.
So I think, the like business model for VC relies on having these billion-dollar outcomes. It's power law driven. What we see in retail, though, is that like the VCs need the billion-dollar outcomes, but the founders don't. Like, in fact, the founders would be better off with a $100 million outcome with far less risk than like, hey, take $200 million and build a billion-dollar business with a lot more risk. What I think we're going to see is like a new wave of businesses, of VCs that are going to be built around funding these retail businesses. And that like they're going to be structured around not requiring these billion-dollar outcomes, and then we're going to see other forms of funding. So you have like Clearbank or Assembled Brands. I think the stat was like 40% of VC funding was going to Facebook and Instagram ads or something like that, which is ridiculous. Like you don't need to like fund that with equity. So I think we're going to see a lot of innovation in how we fund these companies for sure. And I actually think that the traditional VC model will kill more companies. That model will kill more companies than it will create. So I think, not like traditional VC will do that, but I think we're going to see a wave of VCs, and we're already seeing that are kind of going to adjust their model towards like, these $100+ million outcomes, which makes sense in this ecosystem, but don't really fit squarely with traditional model.
Future Commerce is brought to you by Vertex. Vertex Cloud is the automation platform for tax calculation and use tax and everything in between for businesses of all sizes. From SMB all the way to enterprise, businesses all over the world trust Vertex for their tax calculation needs, and you should too. Check them out today at vertexcloud.com/futurecommerce. OmniSend is one platform to control all of your marketing channels. From marketing automation, SMS, and email to forms and segmentation, you can bring together different channels under one platform with OmniSend. OmniSend's powerful platform allows you to link together every customer touch point with one dashboard. And did I mention they have the most transparent pricing in the entire MarTech industry? Find out why brands like Fred Siegel and Unilever trust OmniSend with their customer relationships. Find out more about OmniSend today at omnisend.com/futurecommerce. Gladly is a radically personal customer service platform. Gladly gives customer service teams the ability to treat their customers like people, from knowing their last purchase, their dress size, or even their child's upcoming birthday, all before ever saying hello. Built for the way that people communicate today, a customer and their history are never parted within Gladly. And all conversations across all channels are all contained under a single conversation thread to give agents, the real heroes here, the tools that they need to deliver exceptional customer service experiences. Gladly works with some of the most innovative brands in the world, helping them to deliver a more powerful and more personal experience for their customers. Some of those customers are JetBlue, Tumi, Joanne, Godiva, and Native Shoes, and maybe even you. Don't wait. Find out today what a radically personal customer service platform is all about. Visit gladly.com/futurecommerce to learn more. You touched on something there that made me sort of think, if you are building a brand today, are you building, you're probably thinking to yourself that we're maybe on a hump of appealing to multiple generations simultaneously, and becoming more niche in the way that we deliver brands might not yield the largest outcome for an early stage investment in particular. Mm-hmm. It's also at a time where it seems like early stage is starting to do late stage is starting to do early stage. It all feels very, frenetic, especially in the investment space. What do you think is driving some of that? Is there just uncertainty in the world and uncertainty in the markets, especially in the retail consumer brand space? Or do you think everybody, like, are we winding down that era and now we're moving on to building different types of things?
Yeah, I mean, I think that there's a lot of capital in VC right now, and I think that's like a function of the macro environment. Like, the world is yield starved, period, and that just means there's a lot of money. And so what we're seeing at the seed stage is that there's actually fewer companies raising seed rounds, but the seed rounds are larger. It's not that, before 10,000 companies raised a seed round and today 20,000 are, actually that number has remained relatively flat. What we're seeing is larger seed rounds. And that's, that's really the reality, is that quality is more important than quantity. And that's driving valuations up at the very early stage. So it's common to see a pre-launch brand raising at a $10 million valuation or more. I think that's potentially dangerous, depending on how you look at it. But it's just the reality of kind of the venture environment today.
Shift gears a little bit. If we're thinking about that next generation, you and I were talking a little bit about Generation Z, or this idea of the emerging next generation. We've spent 10 years building brands trying to appeal to the millennials. We have Millennial Pink now. We had a whole generation of consumer brands that all kind of look like each other because they're produced by two agencies.
Totally.
Do you think that we're breaking out of that? And have you thought at all about Gen Z and what that consumer really needs or wants?
Yeah, I mean, it's a different consumer because they're like digitally native in an entirely different way. What I think is that human beings, like human nature doesn't change.
Right.
But like we've always wanted status, but I think what like yields status is changing. So whereas before, like, I'm carrying like an Hermes bag or like some luxury thing was a symbol of status, I think today, like the symbols of status are changing. So they might be like, I listen to like this podcast, or, I go to like pottery classes, or like, I like meditate, or, there's all of these kind of, engaging with like the types of brands you engage with. They don't have to be luxury brands. They signify status in different ways. So I think tapping into like that is really important. Like the things that yield status are really changing. Saying that like, I don't know, you like read this like one thing or listened to this like one podcast is like the right way to like signify like who you are and your identity. And I think broadly speaking, like this is a generation that does spend with their conscience, but they don't want to sacrifice. And I think that's the key thing, right? Like before, like, there's all these like eco-friendly brands that try to like sell like green products, and like it didn't work for a long time because they didn't really have the like aesthetic sensibilities that this customer wants. So I think the key is like, yes, have like something sustainable or something that speaks to their values, but like they don't want to sacrifice. They still want like convenience is table stakes, aesthetics are table stakes. Like the brand better be like amazing. And like I think actually a great example of that is Magic Spoon, the cereal brand. So like their branding is just like it appeals to this like nostalgia. Their visuals are amazing and it's healthy. There's a lot of people that tried to do that cereal thing before. That's the thing about consumer brands. It's like hard to predict success. Like hindsight is 20/20, but it's easy to see why like they've kind of managed to break out a little bit. So I think for Gen Z, it's like really tapping into the kind of like they are like self-interested as humans are, but they're also spending with a conscience. As long as you're doing something that feeds their like ego and identity and self-interest and also has like a common good, I think that's like the sweet spot.
We had mentioned in the pre-show that we both read the Chips and Dips newsletter by Emily Singer, and I discover so many brands through Chips and Dips. In our episode that we recorded with her a few months ago, she said brands, modern brands, either build community or they have a conscience. And I would add a third to that, which is I think they deliver convenience. And if I were looking at the world of consumer expectations that Amazon has created for us, it's that products should be lowest possible price in the marketplace and delivered incredibly quickly for little to no additional cost. And I'm curious, we used to ask the question if the consumer could afford the product, and now I'm really concerned whether or not the brand can afford the consumer.
Yeah.
Because the consumer's expectations are sort of outsized.
It's such a good question. I mean, I think from a macro perspective, I do think that the ultimate winner of this retail reorganization is the consumer. Like a lot of the margin is going to the consumer.
Yeah.
And frankly, like Amazon set those expectations, like free shipping, free returns. Like, I've built an e-commerce company before. I've invested in several. There's like a real hard cost to all those things. And I think, Amazon has like led people to believe that returns and like logistics are free when there's like a real hard cost behind that. So convenience is table stakes. So I think from a macro perspective, I do think the true real winner is the consumer. Do I think there's like opportunities for brands to win? Like I think Amazon wins when like in products that are commoditized. But there's certain things where I think consumers are willing to pay a premium. Amazon is not community, it's not experience, it's not curation. And so I do think there's like pockets of places where the consumer is not so price sensitive. I mean, you look at like Mischief or like a few examples that are just like, I mean, it's insane. Like they just drive these like cults. Can they scale? Can they be like venture scale outcomes? I don't know, but I do think that there's room for those. But ultimately, like, there's more consumer surplus than there will be, like, and I love the way you framed it. Like, can the brand afford the consumer? It's a really good question. And frankly, a lot of that I think boils down to distribution. Like, when will we see a platform shift or some way for brands to acquire consumers cheaply? Because right now, it's just a race to the bottom with like Facebook and
really
Instagram, it's really the Wild West out there.
There's this political cartoon some time ago that said, for a brief moment in time, we created a lot of value for stakeholders, but it was like the end of the world, and you see them like around it, like 50-gallon drum keeping warm in a fire. Some naysayers might say that this has been a magical time for public pensions to, fund and the coffers of Amazon's marketing program and Facebook's display ad technologies. And I wonder if that's true. I don't know. I think that's an incredibly cynical outtake.
Yeah.
But I wonder if that's true. Do you think that there is, for all of this parroting and trumpeting of brand ideals or values, do you think that there is such a thing as conscious consumerism? Can you be a conscious consumer, or are those two phrases somewhat at odds with each other?
Yeah, I mean, the way I see it is like consumers are not going to consciously consume if it implies like sacrificing something, right? Like if it implies like paying too much or, at the expense of like convenience. So I think convenience and all of these things are table stakes. But the beauty is if you can find a way to, like my husband recently bought a Tesla. He feels like amazing about the fact that like, he's driving like a car that's like, electric, and he's like, it's just feels better for him, and he feels great about the fact that, there's like, he doesn't have to go to the gas station every week, et cetera. So, those are things that people really, truly, fundamentally like want, as long as they're not sacrificing something, right? And that's where I think that this is like consumers want to have their cake and eat it too. Like they're not willing to like, let me like spend with a conscience, but like, I don't want to like wear something where I don't look well, but even if the brand's like very kind of ethically sourced and produced. So, and that's like, I would say, like where we need like human ingenuity and like innovation is how can we build for a consumer that is increasingly conscious, but also doesn't want to sacrifice. Like you want to, you want value, you want price, you want status. And so, like the stakes are higher for sure. But, I think there's like a lot of brands out there that are proving that it can be done.
I think there's a lot of innovation to be had for sure in a lot of those spaces. I think it comes down to sort of the nuts and the bolts of. I look at what's happened in textile innovation, especially in sustainable textile innovation in the last 10 years. It does seem like it's easier than ever. Look at what's happened with food recently in plant-based proteins. So I do think that we're heading in the right direction. I'm fascinated. What are some things that you think are emerging trends or things that we should be keeping an eye out for in the next 3 to 5 years? We are called future commerce, so we like to look at the future a little bit.
Yeah. I think there was this chart that was put out, I would say maybe like a year or two ago, that essentially looked at how over time the prices of certain kind of categories of consumer spend were changing. And so electronics and clothing and all those things were like clearly trending downward. But there's these few buckets of consumer spend like healthcare, education, childcare, which have dramatically increased over the last kind of decade or so. And that's what I think is really interesting is why haven't the benefits of technology accrued to those sectors? And what can we do to kind of, enable like more value creation for the consumer in those sectors? So I think a lot about, education, for example. In education, it was assumed that, that all content is now on the internet. There's like free content. And so, the internet is going to displace traditional schooling. But the reality is that going back to like the human side, content alone isn't going to really solve the problem. Like humans need like accountability and trust and community
right.
and all of these things. So that's like one of the things I'm thinking about is how can we drive change into education from the outside in? And then healthcare is like another big category, right? Where if you think about like the primary like customer in healthcare, it's not the patient, it's the insurer. And if you think about like how that misaligns incentives, it's pretty wild. And so I'm really interested in companies like Modern Fertility or Nurex or Hims and Hers that are really kind of creating consumerized healthcare platforms and driving change from the outside in. And another really interesting thing is, I recently heard these terms, the consumerization of enterprise and the enterprisation of the consumer. So I think across the board, what's interesting is that as we see this consumer innovation with like Amazon and Uber and these companies that really set the standard, those standards are going to kind of pervade everything, all areas of our lives, from work to outside work. And so I'm really interested in the people that would have been building like a consumer social app years ago might be building something for the workplace right now, but it feels like a consumer thing for some reason. So just applying those principles to other segments, I think is really, really interesting. And then lastly, I've been really following Lee Jin's work at Andreessen Horowitz. She wrote the kind of 100 fans instead of 1,000 fans.
Right.
And I really, this idea of like me as a service and how like we're shifting from this like gig economy, which was commoditized work and just like dehumanizing people because frankly, like, I think when we talk about automation, we're trying to protect the people, not the jobs, really.
Right.
Like, there's just some jobs that really don't have a lot of dignity. But what I'm excited about is like as we transition from this gig economy to this passion economy, and we're really empowering creators. What does that mean? Like for people that have a talent, but previously like didn't really have the tools to monetize that. And so like in the last couple of years, we've seen like Shopify democratized commerce for a lot of creators, but I think the next wave is like you don't need a lot of people, but what if you have like some unique talent or skill or creation that you can monetize? And I'm just really excited about the tools that are emerging to facilitate that.
Wow. Probably the best 5-year outlook that I've heard yet. This has been phenomenal. I'm just so excited to have met you. I'm so glad that you're here and local.
Thank you.
If people wanted to find you on the internet or subscribe to your newsletter, where could they get that?
Yeah, so my newsletter right now is at sariazout.substack.com. It's called Check Your Pulse. I'm also on Twitter, Sari Azout, and on Instagram, Sari Azout Baka. It's pretty complicated, but maybe you'll add it to the show notes.
We'll link it up, for sure.
Yeah.
And you'll see it on a newsletter forthcoming. It's been so lovely to have you.
Wonderful, and
thank you so much.
Great to see that somebody else.
Thank you, Sari.
Awesome.
And thank you so much for paying attention. Thank you for watching and listening to Future Commerce. We want you to lend your voice to this conversation. You can do that at futurecommerce.fm, and make sure that you subscribe to Check Your Pulse, but also to Future Commerce Insiders, where we're talking every single week about topics just like this. What are you doing in your business to do arbitrage against Gen Z or the changing consumer mindset? We want to know, so drop us a line at hello@futurecommerce.fm. Thanks for watching, and remember, we're not here to predict the future. We're here to help you shape your future. The last time we talked was, 7 months ago in person. You were one of the last people I saw in person at the Future Stores Miami. And the world's changed quite a bit, and your writing has continued. There's so many things that I'd love to talk to you about, but I'd sort of love to just ask you right off the top, what's important now, and how does that contrast with 7 months ago? Like who are you now versus who you were the last time we talked?
Yeah, fascinating. The world's really, really radically transformed since then. They say things happen gradually, then suddenly, and I think we've really witnessed that. I think a couple things, right? I think that in a world that is what I call post-place, right? A world where everything is happening online. I think in particular in the world of e-commerce, we're realizing that the e-commerce infrastructure that we set up in the US was 100% search based. It wasn't recreational. It wasn't emotional. And that we kind of optimized for price and speed and kind of the Amazon of the Amazon kind of effect. And I think part of what we are seeing kind of a renaissance of is more online places that give us those moments of delight. Because if Amazon is buying something, then what is shopping? What is that kind of moment of delight? And the reality is, I think we didn't really have that in the US, in contrast to other places like China that are far more developed. As far as that goes. So I think that the opportunity to build the tools for a world that is post-place has really kind of opened up. I think beyond that, the business of aspiration has really changed from a values perspective. So if you think about boasting like high budget editorials or yachts and private planes and spacious real estate, all of that just feels like so out of line with reality. Yes. I just think everyone is so much more aware of, I mean, there's now kind of consensus that that this is a K-shaped recovery and that we're living in kind of two economies. And so I think that has a lot of implications for luxury and what it means to build a luxury brand in a world that really kind of prizes accessibility over everything else. One interesting thing I'm seeing in that space is brands like Louis Vuitton and Gucci really kind of stepping to the forefront of the direct to avatar movement and realizing that you can kind of bypass supply chain management and logistics and kind of the physical world to really do exciting things in the world of gaming. And I just think that's an exciting space to watch. And it really speaks to how luxury is going to evolve. Yeah, I think that like the idea of like posing in a rented private jet today seems flat out ridiculous.
Yeah.
And so, I think that what I'm excited about is brands that go from being like these really kind of exclusive, kind of supreme Gucci type brands to things that are more inclusive, but still feel like membership driven, still feel like they're a cult and there's a shared ideology. And I guess the brands that come to mind would be companies like Mad Happy or Starface. So yeah, that's something I've been thinking a lot about is kind of how membership can be this vehicle for a different type of aspiration economy.
It's funny in your newsletter, which the newest issue just came out about an hour ago. I love it, and I know we mentioned it in the first part of the show. From the before time when we sat down last time. It's called Check Your Pulse, and if you aren't subscribed to Check Your Pulse, you should check your pulse because I think you should be. But you mentioned two things that I find interesting that kind of fits into what you just said, which is in issue 51 that there was this. You addressed a trust shift away from institution toward individuals. And sort of on the continuum of that trust shifting, we sort of had the influencer economy, which, put trust into institutions via individuals. So my question would be, is that, how does that, like, where are we on the continuum? And do you think that there's an eventuality where we lose trust in institutions altogether? Like, is there a waning trust in institutions of all kinds, from government institutions to enterprise to is the creator economy? Is it just individuals all the way down from here on out, or how does that layer on top of what you were just saying about technology that gives us access or gives us scale to individuals?
Yeah, it's such a good question. I think the first thing I'll say is that I think we have to draw a distinction these days between influence and influencer, because they're becoming two completely different things. I think that influence these days comes from authenticity, which ultimately comes from trust. Whereas influencers are really kind of the result of commoditizing social media reach. And I think that, the Gen Z is really kind of reacting to that. And the idea of brands being relatable, being participatory, and welcoming is a lot more appealing than these kind of like manufactured lives that we see on Instagram. So there's definitely something there. And that's where I think that there's a distinction between the creator economy and the influencer economy. The creator economy is kind of a more recent term. But what's interesting is that it was coined at a time when we've been able to reflect on kind of the dominant business models of the previous era. And whereas influencers monetize from sponsorships and reach, I think that the creator economy is more about that affinity between the creator and the fan. And that just creates a whole new level of trust and authenticity that doesn't really exist in what we traditionally call the influencer economy. So I'm very excited about kind of what I call the participatory economy and how creators can play into that. And to me, that really means that we are transitioning from this kind of unidirectional, one-to-many, like brands speak at you instead of with you,
right,
towards something that's a lot more like bi-directional, where the fans have, share in the value and are connected to the creator. And I just feel like that's where we're seeing across industries, from commerce to marketplaces and education, just a really exciting shift in how we perceive influence from something that is kind of more authoritarian and one way to something that feels like many to many and much more participatory, if that makes sense.
Yeah, it reminds me, one of the first people that I had ever heard about ARFA was from you. And we're having Henry Davis is actually coming on the show in just a couple weeks' time to talk about sort of the participatory nature of running a consumer brand. This idea of co-developing products. It's been said that the previous era of direct-to-consumer really focused on communities or causes, and I'm curious if you feel like we're sort of post-causal, or if are we sort of lower down on, or are we a little further down as to meeting the psychological, or like outside of the emotional needs of the customer, or are we kind of back to meeting basic needs as consumer brands? I'm curious your take on that, and like how that contrasts with how you may have thought about the direction of consumer brands, say like a year ago.
Yeah, it's interesting. I think that what people are more interested in these days is far less kind of individualistic and much more collective. I think people want closeness, they want belonging, they want knowledge, expertise. And so I think that the most interesting kind of consumer brands are not really thinking of themselves as product, like physical products, businesses, but rather kind of still delivering on some sort of like emotional need, but across different channels. So the best consumer brands are going to become media brands. And I wouldn't be surprised to see companies like Goop begin to think about like mental health services. If you like really kind of preach, one thing, then why not kind of deliver along the spectrum of that? So I think to me, what's most interesting is that as more things happen online, you start to kind of blur the boundaries between media and commerce and services. And I think that the best brands are going to kind of trespass all of those boundaries and be able to serve their customer in whatever way they want. I think that the cause thing, it really depends on, I think it goes back to authenticity. I think a lot of the brands that were kind of a product of venture funding and kind of trying to mimic the Warby Parker for X phenomenon and just kind of attach a cost to that. I think that's kind of dead. But I do think that, the consumer is like very socially, concerned. And so I think as long as you do things with an eye for authenticity, I think we'll see a lot more brands with a point of view around ethics and things like that. But ultimately, what's most exciting is being able to truly involve your customer in the creation of the product, because I think that we talk a lot about community, but Instagram is not really community. I mean, these brands are talking at their customers. There's not a ton of feedback loops, or at least I think that in this kind of forthcoming wave, we're going to see a lot more of that customer participation, whether it's the ARFA business model that actually gives a portion of the equity upside to a select group of customers. But there's just a lot of interesting models around this. And I just think that we for a while we've been saying, oh, this is community, but I just think we've kind of like poorly defined what community is, and in so many ways we are kind of redefining that now in a kind of post social media type way.
Do you think that? Let me put it in my terms. A year ago, I might have said that we were on a trend line towards more and more and more consumer brands. Now I wonder if that's true. I think maybe the trend line is heading the other direction. I think not that they shouldn't exist. There's been a lot of writing about that, but maybe the market can't really withstand having so many brands that supposedly stand for so many things. Do you think that the free market is capable of sussing out who is real and who's a poser? In these, in an era that might still be, might see brands still launching around causes or trying to be community based. We've seen an era now that it was basically whatever the false, the antithesis. What's the word I'm looking for? We'll fix this in post. I'm tongue tied. This idea of a counterfeit of that, right? And it's sort of this manufactured authenticity. Do you think that the market will see fewer of those brands by nature? Is it just harder to build that kind of a brand?
Yeah, I think we'll see far less venture-backed brands. And I think that'll also be a result of realizing that the outcomes are just not venture scale for the most part. So I think, and those to me are kind of the VC-backed ones, and there are certainly exceptions, are the more kind of predictable look-alike of all of them. I think that we'll continue to see more brands that kind of grow more organically, and we'll probably continue to see it. There's kind of two categories that I think are exciting. One is categories that historically had very low online penetration. So things like food, for example. I think there's a lot to do in food. And yeah, so I think food is one thing. And then the other thing is that I think we've kind of, a lot of these brands that we speak about that are kind of these traditional VC-backed brands, for the most part based in New York, LA, things like that, are really targeting these kind of young, high-earning knowledge workers in cities, the kinds of people that like spend $10 on green smoothies and kind of think about optimization and high performance. I think what is missing, and what I hope happens, and where I think there's an opportunity, is now that e-commerce has really accelerated, what about targeting audiences with a different kind of social capital, whether it's like plumbers in Detroit or a school teacher or the elderly. I just think that we've really ignored a big segment of the population. And a couple months ago, you could argue that the online penetration rates across those segments were low, but you can't argue that's the case anymore. And so to me, what's most exciting is building for a different kind of audience that is so underserved. And the reality is that most, that I guess that kind of segues into diversity and venture. But the reality is that most people that have been funded by venture can't really kind of imagine how to serve these audiences. So to me, what's most exciting is like is precisely diversifying the pool of people that receive capital and really reaching audiences in meaningful ways. Because I think with the kind of high earning demographic, like it's, how many brands of toothpaste with different positionings could there be in the market,
Right. Apparently a bunch, at least right now. I'm curious. You mentioned something earlier. Actually, no, it was in your newsletter just earlier today about tools shaping us. It's something we say a lot at Future Commerce. Our tagline is "Shape Your Future." Our thesis is that because everybody touches commerce, commerce has a unique place in all of our lives. We all have to engage in commerce, and so part of that is how can we engage in commerce with equity so that it treats everybody like a person and not a consumer. But that also means that that brands that engage in commerce have the ability to shape the world, and that's our thesis at Future Commerce. So if brands have the ability to shape the world, you said something in your newsletter. The tools shape us, and in turn, it either constrains us or expands our thinking, and consequently shapes outcomes. I'm curious what your thinking is around the ability, this idea that brands can shape the world, and thus, or shape us, and then we shape the world. How is that progressing right now?
Yeah, for sure.
Are we on a good path?
Yeah. I think that a lot of people are really deterministic when they look at, at the existing landscape, and they think that, that the way we do things today is the way we'll always do them. But the reality is, and what kind of prompted that post is really kind of thinking that so many of the things that we use today and that are the defaults across everything are the result of historical accidents or the agenda of a specific person, and that those things can be changed. And so if you think about, like, if you're going to start an online store today, you're going to start at Shopify. It's not because Shopify is the best possible way we could imagine to sell things online, because it's not. And I think we're kind of seeing new ways to transact in kind of game-like settings, in AR. But people start with Shopify because it's easy. And so I think that the kind of point that I was trying to drive is that people will always gravitate towards what's easy. And if you believe that, then that means that if we create different toolkits that are equally easy, like if we create very easy ways for any brand to do what ARFA is doing, to kind of share equity with their customers, then brands are going to do it. And by doing so, they're going to shape culture and kind of create a different future. So I think that tools matter. I think there are people that think tools don't matter. And the point that I was trying to make is that, yes, we shape tools, but then they shape us, and that means they shape culture. And so if we use a different toolkit, we can fundamentally kind of transform that. And I think in the context of consumer brands, I think a lot in terms of kind of the interfaces that we use to transact, also the tools that we use to kind of like for as far as like cap table and financing goes. Mm-hmm. The reason people raise venture is because it's far easier than like credit card debt, and you can't get a bank loan. And so what's left? So I think that as kind of new funding tools emerge, those things have kind of the potential to radically transform kind of the default tools that we use, and they have a downstream impact. So I think that, to me, that was just kind of like a way of like just being a little bit more optimistic around not just assuming that the way things are today is the way they'll always be, but really just thinking about how, if we change the underlying tools, we can change the outcomes.
Well, I think then that's a great place to leave it. It's been amazing to have you back, and thank you for giving context and around your last time on the show. It's been so great to have you back.
Thank you so much, Philip. Thank you for having me. It's been a pleasure.
Thank you.